welcome. You're watching The Money Show with me, Kavita Thapliyal, and your one-stop destination for all your personal finance queries. We have lined up a power pack show, and here's what you should expect on the show today. First up, we will analyze the RBI's recent decision to develop a centralized portal for unclaimed deposits. We will be joined by Harsh Rumta, founder, fee-only investment. Next, we will tell you about the best performing small cap funds over the last 10 years and understand if you should invest in small cap funds. We'll be joined by Pankaj Tibrewal, Senior VP and Fund Manager Equity, Kotak Mutual Fund, and Nirav Karkera, Head of Research at FISDM. And finally, on our last leg, we will throw up on the counter to get your mutual fund portfolio queries answered by Amol Joshi, Founder, Plan Rupee Investment Services. So do send us your portfolio queries, and for that you need to note down our WhatsApp number, which is 865-797-4571. You can email us your queries on the money show at etnow.tv. So that's the lineup for the show today, and let's begin the show with a very important topic, which is the Reserve Bank of India has announced the development of a new centralized web portal to search for unclaimed deposits that are older than 10 years. At present, bank customers have to go through websites of multiple banks to claim these deposits. So how will this benefit customers, and how can you lay claim to an unclaimed deposit? Let's discuss all of this with Harsh Rumta, founder of Fee Only Investment Advisors LLP. Harsh, good evening and welcome to the show. Very important topic, and in fact the kind of data that we can see which is there of unclaimed deposit is really high. You know, if we have to just show this data on screen as per banks also, we are talking about more than 35,012 crores, you know, from different banks. If we have to understand, what exactly do we mean by these unclaimed deposits? If I have to start with this question, Harsh.
All of us probably are aware that, we open multiple accounts, we may move cities, we may go to a new employer, another account opens. There are people, who do fixed deposits and they don't tell their families about it. They die, and it just becomes unclaimed. After a certain point of time, I think 10 years, the money needs to be transferred to RBI's Depositors Education and Awareness Fund, DEAF. So these monies have been unclaimed for 10 years. That is 35,000 crores. There is a whole lot of money that is still lying with the banks that might be 8 years unclaimed, 9 years unclaimed. So this number is only going to grow. Now, figures are not really available immediately on hand as to how much of this has actually been withdrawn. This is the money of Indian citizens primarily, which is sort of lying unclaimed. It is very, very large amounts, and it is across the sector. I mean, this is, say, banks. I mean, if you, I think, have done a program in the past on shares and dividends. That's about 50,000 crores, unclaimed shares and dividends, and unclaimed insurance amounts, small savings funds, etc. The amount there is not exactly known, but even that is in excess of 2 or 3,000 crores. So in all, we're talking of at least 90,000 odd crores of unclaimed assets, with more in the pipeline to follow.
So we are just talking about unclaimed deposit in terms of savings deposit, or Harsh, this includes deposits which are there in all form of bank accounts?
No, this would be all forms of bank accounts. It would include current accounts, fixed deposits, savings banks, everything. Not necessarily only individuals. It would also include non-individuals.
If they have some unclaimed deposit in any of these banks. I mean, there's a portal now which is on its way. I mean, it's been set up right now. But like people, if they're watching us now and they want to understand if they have any unclaimed amount, how can they approach? Can they just directly go to a bank's branch and just figure that out? Is it possible?
So each bank is supposed to have this data available on their own websites. But if you don't remember, I mean, obviously the reason it is unclaimed is people don't even know that this amount is there in their name. It's not an easily searchable database. Each bank has its own database in its own format. It's there on the website, but can you think of a person who will, search for it uh, across, say, 40 banks or 45 banks? It's not possible. Uh, Plus, it's not easily searchable. So I think a centralized database, which is what the finance minister has promised, and it looks like it will be across sectors, but definitely the central database that RBI is talking of is a very, very welcome move, because it will create this database at one place. Hopefully, it will be easily searchable so that people can, sit at one place and find out if they have any unclaimed deposits in their name or their loved ones' names. And then those people can look at the process to get it back.
Exactly. So, Harsh, now one thing that comes out very prominently, and one should be giving thrust on this, is absence of having a nominee or any legal hair. I think this is something as a concept when you talk about investments or anything where you are, where your money is involved. One needs to have a nominee or a legal hair after you. So, could you just explain the importance of this?
So, one of the reasons why so much amount is probably lying unclaimed is that there are probably the bank accounts where there are no nominee as well, and the amounts may be too small for the legal heirs to sort of make an attempt to take those money back from the banks by going through a very detailed process. So individually, the amounts might be small. Taken together, it's a huge, huge amount. It underlines the importance of both, of nominations as well as of making a will. As far as nominations is concerned, the banking sector was a pioneer in nominations. I mean, as early as 1985, the Banking Regulation Act was amended to allow for a nominee. This is a very made in India, made for India solution that we came up with. It was a little ahead of its time, and therefore, when they amended it, they included a provision only for one nominee. So, bank accounts, you can have only one nominee. You cannot have multiple nominees. Also, the regulator has not insisted that there has to be a nominee. And if you look at the securities market now, with effect from this year, you will either have to nominate even on your existing account or give a declaration that you don't want to nominate. I think something similar needs to be done with bank accounts as well. So a person is free not to nominate, but then at least the person should make it clear that they have taken that decision consciously, not because they just didn't want to fill out that form. So, and I think that educational thing needs to be done. The second will you mentioned, that is extremely important. I think nominee holds the amount in trust for the eventual heirs, and if the person wishes that the amount should go to the nominee, those provisions should be made in the will as well, so that nomination only give you access to the money quickly. Will is what will give you title to the money. If you are aware, we've done this program earlier. The Association of Registered Investment Advisors, ARIA, has come out with a white paper that was written by Mr. Pramod Rao in his personal capacity, reimagining nominations, making succession smoother and simpler. And one of the primary recommendations of that white paper was that, like in life insurance, where the nominee inherits in as a beneficial nominee without having to account to successors, similar facilities should be given across the sector, whether it is banks, whether it is the securities market, whether it is the insurance, whether it is EPF, whether it is NPS, whether it is small savings. I think the entire law and regulations surrounding nominations need a relook. And clearly, I think the regulators are getting there, and we will see lots of action on this. And that really adds to the ease of living for individuals. Imagine the plight of so many people trying to recover the money that, hard-earned money that their parents or other loved ones have left for them, and having to go through various hoops to get that money. I think a significant easing of the processes and making them, far more effective is something that will considerably improve the ease of living index, and that is something that the government is clearly committed towards.
So, one more thing, Harsh, while we are just talking about your accounts in the bank, your saving deposits and other kind of bank accounts, but then this also applies on your mutual fund investments, on your share investments, and there is a separate kind of a figure that has been unclaimed, even for those investments. Could you please update on the status and the kind of portal that's been established already where people can go and claim their money?
So there is a portal run by the Investor Education and Protection Fund Authority, IEPF Authority, which runs this unclaimed securities and unclaimed dividend amounts. The dividend amounts were about 5,500. The value of the listed shares as of October 21, it has been worked out, was about 45,000 crores. Now, the figure could vary, but you're talking of a 50,000 crore unclaimed shares and the dividends there, which have been transferred to the IEPF authority. Whilst the portal exists, the central portal there exists, unfortunately, it is the search functionality is not really functional. It's not user-friendly at all. Even if you manage to find out that you have certain unclaimed shares, and I can attest to this from personal experience. My father had shares in a company that I found out when I was going through this process. It's been a year. I'm still waiting to sort of get access to those shares. The processes are very, very let's say, extremely bureaucratic and time-consuming. The good news is, I think it is changing. The IEPF has come out with a consultation paper on how to ease the process. Very clearly, as per our understanding, the securities regulator is also working on these aspects. So I think, whilst currently it looks like a very big problem, hopefully, given the amount of media exposure, and I think channels like yours taking this up really helps in making sure that this problem will slowly ease out.
One last question, and then we'll wind up this discussion, Harsh. Since we also spoke about the importance of having a nominee and having a will, could you just quickly give us a checklist of how should we be deciding on a nominee? Because after all, it's your hard-earned money. You've got to be very sure about that. And what all goes into making a will?
So I think it's really not possible to do it in a television bite, but nominee should be the person you want to entrust the money to, who you trust will either, if you want to leave it to him, then that person should be the nominee. Sometimes you might, suppose it's children, right? Then you need to have a guardian. You need to specify a guardian, and that person needs to be somebody you trust. So the nominee normally should be the person to whom you want to pass on the money. So mutual fund securities allows 3 nominees. And therefore, logically, if you don't have more than 3 beneficiaries, just name those 3 beneficiaries as your nominees. In banks, it is much more difficult because you are allowed only one nominee. And therefore, if you want to leave that money to more than one person, then you will have to, through your will, leave it to those people. But have one nominee who you trust will hold it in trust for all the beneficiaries. So it's a serious thing, but it's not that difficult. I think as advisors, when we talk to clients, they're very clear. Normally, they are very clear when you ask them, what do you want to do with your money in case you are not there? I think normally very clear. If I'm not there to my spouse, normally I'm speaking. Okay. And if you're jointly holding then to your children, I think those kind of things are clear for 90% or even maybe 95% of the people. And I think the rules should be made that helps these 95% people have ease of, succession. For the balance 5%, there will always be the things that they are currently, but even that can be eased if they do a proper will. Will, I think, would need a session by itself, Kavita. I don't think we can do it on a television bite.
Exactly. No, but then it's very important that at least you highlighted these important aspects, and obviously we can have a longish discussion on this someday else. But in the meantime, thank you so much, Harsh, for being on the show and helping our viewers with all the important aspect of unclaimed money, whether it is in their bank accounts or otherwise on unclaimed, which is from your mutual fund or shares. Thank you so much.
Thank you.
And with that, we'll slip into a short break, but then post that, let's talk about small cap funds and what is important in selecting a small cap fund, how has been the performance, and what goes into planning a strategy for a particular small cap fund. All of this and more after this break. Welcome back. You're watching The Money Show with me, Kavita Thapliyal. And before I move on to our discussion on small cap funds, let's talk about Reliance Jio's results. So Reliance Jio posted Q4 results today. Company's revenue jumped 2% quarter on quarter to 23,394 crore from 22,998 crores. Now net profit too rises to 2% while margins have remained unchanged. Revenue, PAT and EBITDA results were in line with the ET Now poll. So that's the number coming in from Reliance Jio, and later in the evening we'll be waiting for RIL's results, and you'll be having the best panel on ET Now for that. Okay, so we move on, and when it comes to investing in mutual funds, small cap funds as a category generally attracts a lot of interest from investors, and investors look to earn maximum profit from these funds even as it involves a higher risk. Today on the Money Show, we will analyze the top performing mutual funds from this category and understand how these funds have changed their strategies to mitigate risk and earn profits for their investors. Let's welcome on board Pankaj Tibrewal, Senior VP and Fund Manager, Equity, Kotak Mutual Fund, and Nirav Karkera, Head of Research at FISDM. Hi, good evening, Nirav. We'll wait for Pankaj, but in the meantime, I really want to ask you a question that viewers all the time ask me and on the show. How much will we earn from a small cap fund? Kitna banega?
Like with most things in life, even the response to this is relative. So जितना अगर आपका horizon काफी लंबा है, so versus the large and mid cap counterparts, small caps have been known to deliver far more higher returns. So for going ahead, let's say in the medium term, अगर large cap के लिए expectations है around 10 to 12%, और उस पे एक थोड़ा सा kicker expect किया जाता है mid cap से to perform in the range of around 12 to 14%. I feel small cap should be pegged around in the range of 14 to 16% over the medium term period as a standard starting point.
So, well, we'll be understanding the fund manager's aspect of this later on, but then I also want you to help us analyze the data of last 5 to 10 years. Obviously, we can't be looking at past returns when deciding to take a entry in a small cap fund. That's not how it works. But then over the years, I really want to understand how the category has evolved, how the fund have performed, just to understand the kind of volatility and the kind of cycles that a small cap category has gone. Because when you talk about mid caps and small cap, they work in a cycle. If they're rising, they really rise high. If they go down, they give you like negative returns. So over the 10 years period, if at all you have the data, could you talk about the funds and the returns that investors have got?
Yeah, so over the past 10 years, like you said, returns have been cyclical. There have been good years and there have been tough years for small caps as a segment holistically. Like, for instance, if you talk about calendar years in 2011, small cap funds as a category returned a negative 23%, but it was quick to be followed by almost, upwards of 35% in the next year. So it has been quite a volatile ride for the small cap category, and that's the nature of the beast. That's how these funds function. So if you look at a longer horizon or a longer period of returns for most of these funds, they will be in the mid to high teens on a CAGR basis for the last 10 years, especially the funds that have survived through the past 10 years. The returns have been volatile. If we were to talk about the top performing funds on a 10-year CAGR basis, right? And let's talk about the most, the best performing funds just 5 years back. Let's say in the year around 2018, the fund delivered around a negative of 16 to 18%, but 5 years just 4 years down the line from that starting point, it delivered a stellar 74%. I'm talking about Nippon India Small Cap Fund, which ranks on top of the table in terms of 10-year performance, right? So that is how volatile it has been for such a fund. For another fund, let's say probably one of the bottom performers, where 5 years back the calendar year return in the range of negative 20%. In the same period, it generated, 4 years down the line, it generated a positive 60%. So this is the crest and the trough of the performance of the best and the bottom performers in the small cap in the small cap fund universe. If you see on an average, on an XIRR basis, the best fund delivered a 24% XIRR over the period of the last 10 years, and the worst performer probably delivered just around 14% XIRR, which is not bad by any return expectation standards, but this is the deviation, this is the gap. On an average, let's say you weren't lucky enough to pick the best or unlucky enough to pick the worst. On an average, the fund category delivered approximately 18 to 18 and a half sort of percent in terms of XIRR. So that's how investors benefited through the cycle.
All right, let's join in Pankaj Shibrewal also. Hi, Pankaj. Good evening and welcome to the show. And we are going to focus on small cap category. So I want to understand the kind of liberty you have, in order to show your expertise and strategize when you are picking up small cap stock. Because as compared to what you do in a large cap fund, where you have like top large cap companies, blue chip companies to select from, I think small cap is a category where you have a comparatively freer hand and the kind of pool you have to select from. Talking about the current scenario in the market, what is that one thing that you are focusing on in terms of innovation and in terms of a different strategy in your small cap fund?
Hi, Kavita. I think the space is very exciting.
Right, it is.
And once
And
you
people
start,
also, I guess.
yeah, but once you start looking at a longer term picture, as India moves from a $3 trillion to $5 trillion economy, and your per capita GDP moves from $2,200 to say $5,000 to $6,000, what will happen is that there will be many new categories which will be created, whether it be home improvement, durables, infra, real estate, recreation, and so on and so forth. And a large number of them are represented by small caps and mid caps. If you take the top 100 stocks which are classified as large caps, 55 to 60% of their revenue are dollar denominated, or they derive their revenues from outside India. But when you look at the small cap and the mid cap space, and small cap is defined as 250th and below, so there's a large universe of stocks to choose from. A large part of them are domestic plays. So if you're bullish on India from a medium to long term, and you believe that this 3 trillion is moving to 5 and 7 over a period of time, this is the space you can't ignore, because a lot of businesses which will become larger in size will be smaller today in size. We saw that in the 80s and early 90s, that the IT bellwethers today were small caps in a way in sums of size, and later on became mid caps, and later on became large caps. So I believe that this sector is very exciting, but also with the caveat that it has its own volatility. And the person before me was telling you about the risk and the patience you need to have in this category, because there are periods which will show you negative returns also. And as investor, you get perturbed during those times. And if you are believing that you will get a quick buck, probably this segment will disappoint you. Also, the second most important point about this sector where professional investors, money managers can add value with a good and a large team is that if you look at the top 100 stocks, they are well discovered, well tracked by the research analyst. But as you move down the market cap curve, the number of research analysts covering that stock actually reduces. And below 250th market cap, there are companies where only one or two research analysts on the street covers that stock. So if your research team is good, they can do deep research, scuttlebutt analysis. I think you can add a lot of value over a period of time. But don't forget that the data is not very encouraging from a overall wealth creation perspective, in a sense that last 20 years, if you look at, only 5% of the small caps have been able to transform into large caps. And that's where the real money is made. So our strategy is that try and have filters where you can make less mistakes, because making less mistakes is the key to investing in small cap. The more mistakes you make, probably the lesser the returns would be. And in smaller caps, because they are smaller in size, you need to be extra careful with the management quality, with the return on capital, balance sheet, and cash flows. So our mantra is that it's a gorilla to King Kong strategy. Have 50, 60 gorillas in your portfolio, which pass your filter in terms of management quality, return on capital, balance sheet, and cash flows. And you don't know while investing which one will become King Kong. But if you are right on the investing side, making less mistakes, be rest assured that out of the 60, 70, few of them will become King Kong and add the returns to your portfolio over a period of time. And hence you see over a 10-year CAGR, this category has not disappointed. And this category, even the last fund the previous speaker mentioned, has done better than Nifty in a way, or maybe equal to Nifty. So I think you need to have patience. You need to be temperamentally okay seeing the troughs when 2018-19 happened, 2011 happened, 2013 happened. And there have been many instances like that. And if you are patient enough, you will be probably rewarded. And it's a good way to diversify your portfolios over a period of time. And if you're bullish in India, I again repeat, you can't ignore mid and small cap space.
Exactly. So now currently looking at the market condition and the uncertainty involved, how are you reading these companies? What are the sectors, Pankaj, that you really want to focus on?
So I think, Kavita, one mega trend which we are riding on is the entire manufacturing revival in the country. And over the last 1.5 years since COVID, we have been positive because structurally there are a lot of changes which have happened. One is the geopolitical order in the world has changed since COVID. A lot of companies, whether it be European based or US based, wants to diversify part of your supply chain across industries. And India is coming as a good location and destination for that. The second one is that the balance sheets of corporate India have deleveraged considerably. And as we speak, the debt to equity of the top 500 companies in India is down to 0.7. And third, the profitability of the companies have moved. There has been a shift from unorganized to organized. And these are structural changes I'm talking about. And hence we believe that manufacturing revival is happening right in front of us. And a large part to play that manufacturing revival lies within the mid and small cap space, whether it be capital goods, whether it be consumables, which is used in production like abrasive bearings, whether it be consumer durables, whether it be chemicals, whether it be cement, a large part of that pack on manufacturing side is represented by mid and small cap. And I see a great opportunity over the next 3-5 years from that theme perspective. The second one, which we are positive on, is the entire revival of residential real estate. Again, that entire category is can be played only by small and mid caps. And we believe that bottom-up stock picking is the key in this area. And in this space also, many home improvement companies, whether it be tiles, pipe, electronics, maybe plywood, all those things will lie in this theme as a part of the entire home revival. And I think there are other more themes like the entire pharma space, some of the mid and small cap IT companies, and auto ancillaries. And I think auto ancillary is again a promising space. We have seen many companies move from small to mid over last 15-20 years and become sizable in nature. And this is another one important part which can be played through small caps. So I think there are various narratives, opportunities out there, 3-5 year perspective. But finally, it boils down to bottom-up selection, selecting the best businesses and management, which will compound your earnings and wealth over a period of time.
Neeraj, how would you explain a case of over diversification of a small cap category in an investor's portfolio? Saying you have a small cap fund, then you also take a flexi cap and you also take a multi cap. Do you think this kind of a pattern in your portfolio is needed when you have a typical small cap fund, or it's important because the strategies could be different for all of these funds?
Yeah, so the amazing thing about the small cap category is that most funds, they take a very distinct approach in managing their fund. So within the category, the overlap is limited. But yes, if you're creating a portfolio and you include flexi caps and multi caps in the mix along with small cap funds, there's a high chance that you could probably have a higher overlap. And the cases are stronger if you are, buying these other category products from the same AMC, because there is a good chance that the universe that they filter out will sort of overlap in their flexi cap mandate as well as the small cap mandate. So there could be a case of over diversification. I feel the correct way to look at the portfolio is at an aggregate level, and then looking at the exposures at an aggregate level. So if you take a small cap, flexi cap, and a multi cap fund, and you break it down to their underlying, their underlying market cap construct, that should give you a lot of visibility into what is the kind of portfolio you're holding, and any adjustments must be made in line of such a portfolio that you look at after breaking down the portfolio, which is once constructed at an aggregate level. I hope that makes it slightly clear.
Exactly. With that, I think, Pankaj, one last question that I wanted to understand about a small cap category is your time horizon really to be long. I'm talking about a fund. And also, I mean, people want to invest in the stocks. That could be a different strategy altogether. But typically in a fund, if you're holding it for more than 5 years, do you also think that one needs to have an exit strategy? Because that's comparatively easier to understand for a large cap category. But what would be the criteria to decide on your exit in a particular small cap fund?
So I think time and again we have seen that the space goes through undervaluation and overvaluation. So if you have a limited horizon, time horizon, I think time whenever the earnings yield, and rarely people talk about earnings yield. And just for your viewers, earnings yield is nothing but 1 by PE. And whenever you see a very sharp compression in earnings yield between large caps and small caps, I think that is a great signal that small caps are overvalued. The second one, which we use as a contrarian signal, and it acts as a great sentimental signal, is the value 100 participation, Kavita. What it means is that when there is greed on the street, nobody wants to invest in large caps. Everybody wants mid, small, micro. And as a result, out of the total 100 rupee which is traded on exchange, only 50 to 55 rupees is traded in large cap. The rest is traded in mid and small caps. And the opposite is true when there's fear on the street. Everybody wants large cap stocks. Nobody wants to invest in mid and small cap. We have seen various time periods, especially the last one with COVID, where everybody wants to hide themselves in the large cap. And that ratio moves to 75-80%. We have seen that whenever there's fear and 75-80% is the ratio of value 100 participation, investing in mid and small cap at that point of time is extremely rewarding. And the next 12 to 18 months, the kind of alpha which you make over Nifty is amazing. Opposite is again true when there's greed on the street and the ratio comes down to 50-55% and you invest at that point of time, the next 12 months is disappointing. So you need to see these market cycles when you need to take a call on exit or maybe look at aggressively investing in this category. I would again repeat that this category gives you great returns over a period of time, but you need to be patient and also make sure that when there's fear on the street, when everybody is hating mid and small caps, I think that's the real time to go and invest your capital. And we have seen time and again over the last 20 years, how this segment could be rewarding for investors which have a longer term horizon. We have seen in our funds as well that, in 2018, 19, and then moving into COVID, the SIP returns for a 3-5 year had actually become negative. And how in 2 years, the entire fortune changed. If you were impatient and you moved out during COVID, probably you didn't see that benefit coming in. So again, I say that this segment comes with its own risk, its own volatility. So beware of that before you invest in this segment. But if you have a longer term horizon, and especially in a country like India, where there are niche businesses, there are great opportunities as you scale from 3 to 5 trillion and then to 7 trillion, and there'll be many businesses which will probably become larger in size. But you need to be extremely good bottom-up stock picker. You will make mistakes, but mistakes should be smaller because in this segment, there's a very high probability of you ending up with stocks which can lead to loss of capital, permanent loss of capital.
All right, so a small cap category which one cannot miss, but then do remember to diversify properly in your portfolio. Thank you so much, Pankaj and Neera, for being on the show and helping our viewers with this category. On that note, we'll take a quick break and post that. Let's get your portfolio question answered by Amul Joshi. Welcome back. You're watching The Money Show, and this is the last leg of the show where there are a plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have on board Amul Joshi, founder, Plan Rupee Investment Services, and also don't forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Hi Amol, good evening. Welcome to the show. And we have Mr. Krishna Kumar N from Tamil Nadu who wants to ask his question to you. Hello, Mr. Krishna Kumar. How are you doing, sir?
Good evening, madam. Nice to have the interaction with you. Yeah, I have a query.
Yes, sir. Please go on.
In small cap mutual funds, like SBI, Axis, Nippon,
right,
the portfolio of small cap allocation.
And these are all small cap funds. I'm sorry, I was just looking at your funds. So you have SBI small cap, Axis small cap, and Nippon small cap in your portfolio, right?
Yeah, not in the portfolio. My query is these funds, their small cap allocation is reduced from 75% to 45% around. Okay. And the mid cap is into around 45% recently.
Yeah.
Usually, the small cap fund allocation will be around 75 to 80%. Whether this is due to that small cap stocks are grown as mid cap recently, or the fund manager has sold the small cap and bought mid cap recently. That is my question.
Right, right. Brilliant question. Thank you so much for sending us your query. And Amol, Mr. Krishna Kumar looks like someone who's very aware of his investment and also tracking the funds, fund manager's strategies and the portfolio exposure and composition. Very valid question. What is the answer, Amol?
Yeah, I am.
echo Kavita's sentiment. This is not the typical question that we answer on this show. This is a very interesting question. So let me take you through the answers step by step. You might recall in 2017, almost 5-6 years back, SEBI came out with something called as scheme categorization, wherein the scheme mandates were very, very structurally channelized. Scheme categorization. Now, as per this scheme categorization, market regulator SEBI's rules, small cap fund essentially should have minimum 65% in small cap stocks. Now, the next question, logical question is, what is small cap stocks? You simply have to arrange all the listed stocks in NSE or in all the exchanges by their market capitalization. As we know by common logic, Reliance is the largest stock by market capitalization, and then you have to go in descending order. Small cap stocks are defined as 251st stock and onwards. All those stocks will be small cap stocks. Now, I understand when you say mid cap exposure has climbed to something like 40%, I'm not sure which definition are you using exactly, but I would like to point you to AMFI's website, Association of Mutual Funds in India. On AMFI's website, every 6 months, the categorization and the stocks list of top 1 to 100, 101st to 250th, and 251st onwards. The list of large cap, mid cap, small cap is hosted. Coming back to your actual scheme names that you have mentioned, let's take Nippon Small Cap Fund. As on 31st March, that is last declared fact sheet of last month, Nippon Small Cap Fund had 69%, so almost 70% into small cap stocks, 19% into mid cap stocks, and 10% only into large cap stocks. There is also a question, another interesting aspect of your question also was whether the small cap companies have grown to a mid cap status. So that's a very valid point. And SEBI has answered this question as well. So any company, if changes category, something that becomes large cap to mid cap or something from small cap becomes mid cap, then it is incumbent upon the scheme, upon the fund manager to rebalance the portfolio to conform to SEBI norms within 1 month period of. So I would like to say, currently, all the schemes that you have mentioned very well match or very well conform to the norms of SEBI, having 65% or more small cap stocks exposures. Mr. Krishna Kumar.
Thank you so much, Mr. Krishna Kumar, for sending us your query. And we move on. We have Abhishek from Kolkata. Hi, Abhishek. How are you doing?
I'm doing fine.
All right. Your question is about Axis long-term equity and Axis mid-cap, and also, all right, basically you want to talk about the Axis AMC's funds, these two funds.
Yes.
You are concerned because of the performance?
Yes. I'm quite skeptical about the news that is going on with the Axis AMC fund house and whether I should keep the fund or I should move to any other AMC.
Okay.
My plan is actually long term, actually for maybe 5 to 10 years.
All right, very valid question, and it's very natural for an investor to worry about looking at the news reports. But then, Amol, there are no impact on the mutual funds in terms of fund performance, in terms of fund strategies, in terms of fund managers. And SEBI obviously has a very close eye on this particular matter, and there has been change at the management level also in the AMC. But anything for an investor to worry about in terms of their fund performance, because Abhishek has almost 5 lakh in these funds, and he is looking to hold on to these funds for a 10 years time horizon.
Right. So we have to look at this question from 2 aspects, 2 angles. One is the kind of news flow that that Abhishek has mentioned. It's been several weeks, if not months. And like Kavita mentioned, there is change of guard taken place at the top level, senior management level also. The news that or the action that we all are speaking about, since it is pretty much old, whatever were to happen, impact or not, otherwise, that is already currently reflects into NAV. It already is reflecting since several weeks or several months. That is one angle or one aspect. But the second aspect is you should select your funds or strategy based on your investment horizon, based on your risk appetite, based on your asset allocation. The third aspect I would like to point out over here is the Axis AMC's equity schemes performance had slipped not just over last few weeks or months, but last maybe a year or 2. One can also say, if you study the portfolio deeply, one can also say the Axis Mutual Fund follows the growth-oriented strategy, and value stocks and stocks from all walks of life, including commodities, did very well into the bull market first phase of 2020-2021. So these are various reasons, but please go by your investment horizon, asset allocation, risk profile. Since the performance has slipped over last 3 years, 5 years, even 2-year horizon, I would recommend you can have a relook. If you are considering other funds in mid-cap space, you can consider Motilal Oswal Mid-Cap Fund. In ELSS space, you can also look at Bandhan Tax Advantage Fund. Abhishek.
Amol, now looking at the fund's performance and specifically talking about a mid-cap category, what are the funds that one can look at apart from Axis Mid-Cap?
Right. So I have already mentioned one fund, Motilal Oswal Mid-Cap Fund. You can also look at another fund called as PGI Mid-Cap Fund. Again, it depends on the risk appetite or investment horizon of investors. You can also look at a large cap mid cap combination, a fund that I recommend, HDFC Large and Mid Cap Fund as well, if you are wanting some kind of large cap exposure baked into the portfolio.
I think that will be all. That much time we have for today, Amol. Thank you so much for being on the show and helping our viewers with their financial portfolios. And time for me to sign off, but I'm going to leave you with our WhatsApp number and email ID where we keep waiting for your questions. Thank you so much for watching. Goodbye.